Right. Okay. So good evening, everybody. We are looking at we're gonna have a quick 2023 review, and then we shall, of course, also see what do we expect for 2024. Um, as far as I'm concerned, my mentor used to say that people ask him, he knows quite a lot of famous people, and they say, "Oh, what do you think the 90s would look like?" And he tells them, what a great question. As the 80s would look as much as it has been. So what I'm gonna say is that let's just take it in beats. Just bear with me. Let me share my screen first, and then we'll go from here. So I took this not from, so I didn't particularly prepare a presentation because I don't want to make it formal. Remember, it's still just going to be a chat, and we don't just talk. We just all talk. And you know the way it works in this world. If you cannot read, you cannot really make it in life. Well, you can't make it much, if I can say. So the year started this way. I got this from JP Morgan. I thought it would be good if I said it to you, as most of us are, stocks investors. So the year started with what? You could see the 2022 return compared to 2023. The year started very negative, coupled with 2 years ago. And as you can see, everyone went, there's more, went into cash. Equities was down. World equities portfolio 60/40. This is when people put 60% in equities, which is stocks, and 40% in bond. And then commodities, everything was really bad, and it felt like the world was falling apart. So, but there you go. I'll quickly run through this. I only got about 3 pages or so, nothing much. Okay, and then you can see 2023 now. It's a reversal of pain, as they called it. You know, you literally could throw a dart, and everyone has seen positives. One thing you need to also understand is that don't don't get caught up. Everyone's saying, "Oh, this stock has done 900%. Oh, it's already late. We're not going to get it." No, because some of them haven't even recovered to where they started off this year. So forget that percentage. It could be misleading, okay? And at some point, markets was just punishing every good or bad news. Remember, they say you cannot fight the Fed. So that's what happened this year overall. But yeah, like I said, the year started off on a negative part, but we are here now, and so this is where we are, and there's been a lot of reversal back to quite a lot of equities or indices back to all-time high. But remember, the indices does not always represent the stocks. People often mistake that. Now, again, what caused we know, I was listening to something yesterday, actually. If you realize everyone was calling for lockdown, and of course they did lockdown. They printed so much money into circulation, and was it Sweden did not do lockdown, but they were very aggressive with the spacing. We are being punished for what happened 3 years ago. We are part to blame because if you collected that money and you stayed indoors, you are part to blame. They printed paper and they called it money, so of course that has to be taken back. So the Fed, that created inflation to generation highs, and the Feds, of course, which the markets we focus on, they hiked the interest rates, and now we inflation has come down by a lot. They've been able to boost their budgets, their portfolio, and therefore, this is people tend to follow the dot plots, even though the Fed says a dot plot doesn't really matter, but we know they say something, they do something else. So, based on what we can see, inflation is coming down aggressively. There's a there's a projection. Remember, I was always screaming that it wouldn't just come down in a straight line. So, this is where we are right now. By next year, 2024, things will start coming down. But either way, you know, I don't know what it will be, but people are betting on 4.5, somewhere right there, as you can see, just about halfway. And but the Fed said it over and over and over that this is their target. So don't expect inflation, don't expect the entire 2% target to be met to next year. Or even if it is met, remember as far as the Fed is concerned, they want to break something, and if they're going to break something, then of course it could lead to recession, and that's the only way it could lead to recession. But remember, also you need to understand that interest rates would not be lowered except the what? Um, except there's a noticeably dump in inflation figures. But anyway, and finally, this is literally the entire year in review. So let me just let me put this back in view. So okay, you can see it's quite, I don't know how big it is, but I was trying to make, so this is literally what happened this year. And if I don't know if I want to read it all to you, but I don't want to feel like I'm just reading. But if you look at this right now, we have the, from 1 to 40 events in chronological order. If I'm going to go through, so we talked about, China ends their COVID policy right here. Don't worry, I will mute everybody just in case. Okay, cool. Oh, that's Naomi. Hi, Naomi. You can see the balloon gates when China, we had a Chinese spy in, where there's a mysterious balloon which said came from America, was over China's space. If you look at this key one here, pivots here, this is the Chat GPT launched, and of course he just created or raised the whole AI debate. That's number 8 here. If you go straight to 2025, this is when I'm sure you all heard it. Oh, US, they had a downgrade in their economy, and we thought the world was gonna fall apart again. But like I keep saying, just hold sway, play fair, and just focus on what you can focus on, what you can control, which is your risk appetite, etc. And then, of course, if you look at 31, it's quite a disaster, unfortunately. This is when the Israel-Hamas war started in October. So these are all key figures. And look at 40. This is when they signal that, rate hikes are over and cuts are on the cards. Absolutely. So, I mean, this is the COP 28 climate talks here around, I think it's about here, 38. So this is literally the world in view. I will try and put this in the group just so you can the charts and things so you can see and what they represent. So yeah, and of course we could see. So that's economic, politics, and geopolitics, nature, climate, culture, and technology, and the markets as an overall. So you can see them all. So, and of course the treasury yields, which again, which tend to lead while the stock lags or the equities lag. Okay, so like I said, I just put something together. It's not a big deal, but this is the year as in view and overall. So we can say there's been a reversal in fortune, if I'm allowed to use that word or phrase or sentence. There's a reversal in fortune, generally. And the good thing about us, the wealth hackers or yourselves, it's not just about me, it's about you. Generally, it's the fact that we've been flexible, if I can say, to say that, when it's time to run, we run. When it's time to fly, we fly. We're not shaken up by the market. Thank God for that. I think it's a big, big, big learning process for all of us. I will say, for me personally as well. And I'm grateful that you guys have been able to embrace it as well. What do I mean by that? People say, "Oh, today's bullish, tomorrow is bullish," or I don't care, and you surely should not care about bullish or bearish. What do I mean by that? Because you as traders, you don't care whether it's bullish or bearish. You trade what you see. Does that make sense? As an investor, that's when you need to worry about bullish. You got to wait. But as a trader, you don't care. Bearish, okay, then I'm gonna switch on my shorts. Bullish, then okay, I'm gonna switch on my long. So you do not care whether it's bullish or bearish. You trade what comes to you. So people always talk to me, "Oh, BK, so what do you think? The markets is going to be bullish, is it bearish?" I'm like, doesn't bother me. I will trade the good setup, thank God. But last year was a funny one. The market was actually, remember the market moved it does three things: up, down, or what, sideways. And there was a time it was just sideways, choppy. Okay. And when it's choppy, then of course we have to readjust and there are times where we have to get out as well. You don't have to be in the market all the time. So That's the good news of how flexible we have been. So if you've been able to get the knowledge, some knowledge, and you've been able to apply in the markets, don't abuse it. Well done and congratulations. And if you knew you haven't done it, just take time. It will come eventually. It will come. Okay, it will come. And I think as some of you saw, like some of the trades we've made, we've seen big name traders call something else, say this is going to be bearish, we go bullish and we make money. Sometimes they say bullish, we go bearish, we make money. So we've been able to trust our, not just, we don't just trade based on guts. You know, I see people say, oh, next year is going to be bearish. And I'm like, oh, what's the source? Trust me, bro. That's this, you know, we don't trade with that. So um it's some knowledge we've gained from the market, and thank God we've been able to gain that. So we'll stick to that. Okay, the second thing is so things I say we're going to discuss is our learnings of the markets of the year in review, which I've just shown you. I don't want to go through the, some things we've talked about in the last session. Otherwise, people can watch the last session for re-listening sake, if I can say. Okay, so um, what do we expect in the new year? Again, I think in the new year, so what do they say? You got to learn from the past to be able to look at the future. So what happened this year? Let me find my. I'm gonna post the charts again, and then you're gonna see, and we'll talk about next year. Like I said, I'm trying to make it as informal as possible. I wouldn't spend much time in it. You as a trader, you don't care what you see, but remember, some of us still have portfolios we trade and we invest. So this is the year in review. So let's just pick some of them again, and how they do affect us. Okay, we do have Israel-Hamas conflicts. The markets, remember, so people also, I don't know if you saw me this year, I kept screaming sorry, recession, recession, recession. Because the reason I said that is because normally when there's a rate cut, three things happen actually. So if there's a soft landing, of course, you do get a bull market as an investor. You do get a bull market. If there's if if there's a hard landing, of course, then that's trouble. Something will break, and then of course it could lead to a recession, because if the market's been stubborn, and it's quite a funny year. 2023 was actually a stubborn year because no matter what they did, the consumer strength is just strong. So that could lead to a recession. But of course, also even if there's a soft landing, there still could be a recession. A recession does not necessarily mean that everything will sell off. Remember, what defines a recession? When you have two negative quarters GDP. Okay, so what do we expect next year? So earlier today, I did say that I expect crypto to boom next year, and somebody said, what do you mean? How do you know? I almost said, trust me, bro. But no, I'm joking. So a few things I pointed out, okay? I am one not to believe much in the halving, but it's not about what I believe, it's about what the data says. And I don't know if everyone's seen this thing about the price of Bitcoin of the past Christmas, every Christmas, the past 12, 13 years. And what you notice is that, it's it's just like this deep, and then it keeps going up, and then it dips a bit and it goes up. So I realize that every halving, and you've got to understand what halving means. Otherwise, please feel free to Google it. When Bitcoin halving happens again, when Bitcoin halving happens, people look forward to that. So that's number one. So that is a factor to something to factor in. So this are all mostly technicals, fundamentals. Number two is the fact this ETF hype. Okay, Bitcoin is something, whether you believe it or not, crypto, it will not just go away. Now we had at some point we had 3 trillion in the market, but when we had 3 trillion in the market, guess what happened? The market sold off, and you know what? It didn't go away. It sold off. I think we had about 600 billion, but now it's coming back in, and because of the demand, it's the demand. It's demand that fuels what the institutions do, and because of the demand, guess what happened? They're creating an ETF. But one thing, I read a comment from someone, and I actually believe in the comments. If you're a crypto enthusiast, buy the real thing, not the ETF. That's all I'm going to say. But that's just me. Just like if you're gold enthusiast, regardless of where your position is in crypto, I'm not going to say whether I believe in it or not. It doesn't matter. Okay, so that's the second thing. Number three is the fact that I can't remember where it is, but there's still quite a lot of money on the sidelines. Okay, what you need to understand about institutions is that, and I say the same thing to guys in the group as well. Guys, do not always try to be, don't be early. In fact, it's okay to be late because let these guys be the scapegoat. Let them be the liquidity. If the market's going to reverse, then fine. So don't always try to be early. Don't be the earliest. Okay. So there's still quite a lot of money on the side by institutions anyway. So you might say, yeah, the markets are actually at an all-time high. Yes, the market's at an all-time high, but the fact that the market's at an all-time high doesn't mean much. No, it doesn't mean much. Why? Because if you think about it, when you look at the S&P, for example, we have 512 companies, for example, or 503, but just about seven of them constitute 25%. Okay, so I mean, Apple, for example, is the entire UK stock market, so or LSE. So it's not about, oh, the market's going all-time high, I'm going to quickly go into cash right now. No, there's still quite a lot of money by institutions, and institutions have to invest. And of course, speaking of sentiment is coming down, things are getting better. So of course, the market hasn't got a choice than to uplift the people's mood. So if you're in the market every day like myself, you just seem to be early, and that's fine. But it's okay not to be early. So that's another fundamental that will boost next year's pump. Speaking of crypto, and I'm not saying the entire year. I'm literally looking at it by till April-ish. And of course, it could be a sell the mark, buy the rumor, sell the news events. I'm not saying hold till then. I trade what I see on the charts. And then again, and on the forex side as well, countries are still quite in trouble. Remember, we haven't actually hit the inflation target. The fact that you are trading, that just means you're early and you're able to get the juice quicker, okay? Compared to if you read it on the news. Remember what I always tell you. If you read it on the news, you are late. So that's another thing. So we've got the markets. I wouldn't say how long the Israel-Hamas war will last. I wouldn't be able to say, God help the region. But I think also next year things will come down. Well, things will calm down eventually. I'm not saying it will die off next year. People talk about Third World War. Of course, escalation could still rise, but I can't say when. Again, it's an election year. That's a big deal. I bought a book called Traders Almanac, stock market Traders Almanac, and can't remember where I put it now. Okay, in the last God knows how many election years, I think there's only been two of them whereby the market's been down. Again, past performance not a representation of the future, but again, Biden would want to serve his second term, and of course, the Fed is going to make it a favorable year for him, etc. So that's another thing. Okay, so there's a rumor that it might be the Fed swan song. Say, oh, he probably wants to leave. He wants people to say, oh yeah, he beats inflation, and of course, he want to put money in people's pocket. I don't know, but I'm just saying, looking at next year, there might be another opportunity as a result of the election. So we have all these good things coming. Inflation is being beaten now. Don't get it wrong, inflation could still go up, but the fact that inflation could go up does not mean stocks will still keep coming down. Okay, it might just, remember, it wouldn't go in a straight line. It might be the odd blip, and then things will come. Just like when you make a short or you go long, sometimes it goes against you temporarily, and then it keeps going your way. So that's something you need to also respect. So that's where I see next year. Just based on some of these factors, I expect personally as well next year to be positive all round. Of course, based on the market that we trade, the commodities are still a lot on the side, still down generally. So I expect next year to be favorable to us. Okay, the next thing so we'll talk about is, speaking of the third point, bear with me, sorry, just trying to find it. The pointers that we mentioned. So the third thing we said is, okay, right. So if you're trading, you probably don't need this already. So I'm talking about the newbies now who are with us, who literally, in the wealth hackers community, private community that we have, and not just community. If you're a trader generally, so I did say something about. So the third thing I wanted to talk about is trade management for newbies. Maybe I will. Yeah, I'll talk about that quickly, and then we'll talk about the last thing on the agenda, and any of the business. So this is a gold. This is gold. we had a gold short here. I don't know what price you guys entered, but so one thing I mentioned is that two, three, four of us could enter the same trade, and it's possible that only one person makes money, or nobody makes money, or one person. Sorry, you could enter the same trade as me, and you may not make money. Why is that? I'm not saying. So one thing you've got to understand is, of course, the psychology aspect. But this is just gold on. Let's just have it on a daily time frame, for example. So, let's just pretend you got into gold at this point right here. This point right here. So let me make it 2 hours so you can. Where's my screen blinking all of a sudden? Sorry. Bear with me, please. Okay, that scared me there. So let's just say you have a gold short here. It doesn't matter. And it went against you a little bit. So, and you probably just cut your loss. So of course you lost money, but you went in here. Some people, so let's just pretend you went in right there, right here, short. Okay. So when it got here, let me make an hour. Yeah, I was a bit lost for thought. So you got in here at this level. Okay. And you went in on a short. So when you, bear with me, there's something I'm trying to do. Trying to make it horizontal. So you went in on a short here, okay? As you can see, you went in on a short. And what did you do? The minute you got here, you came out, okay? But somebody got in somebody went in with you at the same level, okay? So the same person that went in at the same level with you, it's a short. I probably should use a long too, but I'll use a long as well to demonstrate it as well. So somebody that went in as you've come out already. You say, you know what, I'm not greedy, I'm happy. You've come out, but somebody who went in as you, um, yep. But then, somebody came in late, rather, came in at this point, okay? But guess what happened? Somebody came in here, here. Yeah, I got it. Apologize, sorry. Somebody came in at this green, at this red. Can you see this top here? But then it reversed and then it went up. So I don't know if I'm making sense. I don't want to confuse you guys. So good. Let me get rid of this triangle and then it will make more sense now. Okay, so this is the gold short. So you came in here at this point. Can you see this top here? You went in and it went down, but then somebody came in and then the thing reversed and it went up here. Can you see? If you close your shorts, you will lose money because it's coming to your level, okay? And it's reversed. It doesn't even matter. Let's even say you went in here because you want it to keep coming down. So, and then somebody came in right, and then sorry, the market reversed. And then you thought, oh no, it's breached my entry now. And then what? You lost money. Okay. So that's something you say, oh no, I've lost money. But somebody just kept holding, or another person went in the same price as you, and now it's come down. So this person is back into money. So the two things you need to understand, or let me use the long, since that's what majority people of the people do. So you went in right here, okay, and with it, but then this is where it is right now, as you can see. So what do you notice? It's gone against you. Okay, so this is trade management, and this is what I tend to advise people. So you came in here, it got here, you didn't take profit because you thought somebody or you read it from somewhere. It doesn't matter. It's going to 3,000. Okay, but now it's come over there. You went to party. Yeah, I'm going to spend this money. I don't care. But then it's come against you. It's now here at this level. So what would you do? Normally, you think, you know what? I'm either going to cut my loss or I'm going to wait. I'm going to, they call it spray and pray. I'm going to hope that it's going to go back up. Or what would I do? Probably going to add more money if it goes against me. If it goes against me, it's going to eventually go up again. Oh, it's gold. People are always going to buy gold. No, people would not always buy gold. We don't know. Okay, so one thing you need to respect is that once you are in profits, okay, especially if you're not very good at trading, one thing I always advise, guys, please, it's not, I don't want to go very Nigerian. It's not my mama money. Lock a little bit in, if it's all. Okay, look at this point here. This is all money for you. Lock that bit in. Okay, all this. It's your money. It's your money. It's profit. At least lock it in. So even if it comes a bit down, at least if it breaches, you could say, okay, at least I made something. I made something. Okay. If you lock that in, then you're better off compared to, you waiting. You just leave yourself totally open, leave it naked, and then it comes against you. So that's something you need to understand when it comes to trade management. I don't know if I explained that properly, but yeah, I hope it makes sense. It's something we'll talk about again. So if you enter the market, you entered here, boom, and it comes here. You didn't take profit or you didn't lock anything, but all of a sudden it comes right here. What are you gonna do? Oh no, it's gone against me. Oh, BK, can you please help me check what's going on? Um, you've got to protect that a little bit first. Okay, never let a good trade go bad. If you set a stop loss, then that's fine. If you do not set a stop, you don't have to. Some people don't do stop loss. It's up to you how you want to manage your position. Okay, so that's one thing you need to worry about. So don't let a good trade go bad. And these things do happen. Remember, we don't control the market. It's a combination of opinions of people. So that's number one. Number two, no matter what leverage you trade with, what leverage or you trade at, you got to understand also that if you have a trade, greed is the problem, absolutely. So if you have a trade, um, you trade with leverage, no matter what leverage you use. For me, the lower the better, of course. Try if you have $1,000 in your account and you want to trade at 10x. So remember, automatically the margin is going to be multiplied by 10. That means you have, so that means you have 10,000 opportunity to trade with. So these guys are giving you money to trade. Okay. So these guys are giving you money to trade. So what should you do? Then of course, I've talked about the 1% rule before. You don't have to do a 1%, but just try and minimize it as much as possible. Give enough room for breather. The whole money is not yours. That's what they call money management. In position sizing is one thing. Size as small as possible so that you have enough to play with. And of course, the other one is money management. Okay, so you got to be careful, be gentle with yourselves. So those are the two things. So number one is trade management. Manage that trade. If it's gone in profit, and especially if there's enough buffer, try and protect it. Except it gaps down, that's when it can breach that. And number two is position size. And don't you have $1,000, but then you want to size with 90% of that money. Of course, you're always going to you're gonna keep losing it all. So that's one thing as well. And the third one is money management. Which is the same thing we talked about again. Don't oversize your positions. And again, the more risk you take, the more leverage you use, the more portfolio is at risk. So you've got to be able to understand how to manage that thing. But if you're very good with how to allocate positions, then of course that's fine. There's no book that you can read that will teach you these things. BK, no matter what, cannot teach you. You have to be in the market to understand it yourselves. And final thing I wanted to mention was portfolio construction. Okay, there's the law of averaging. I think you don't need to have a maths degree to know that the more positions you buy, the poorer your average will be. Okay, the more positions you buy, the poorer your average will be. So when you have, let's just say you have for me, I believe in the more money, the better, of course. Let's just say you have 5,000 portfolio. So position sizing is what I just talked about, which is your position, size your position accordingly. There's the 1% rule. Sometimes some even talk about the 3-6% rule. Some even size as much as 10%. That's okay, but just make sure there's not protect the downside. That's what I mean. Protect the downside, okay, as much as possible. That's position. So size that position accordingly. If it's something that you need to understand the beta, if it's something that's quite volatile, then of course you want to keep it smaller and you want the position to be in your favor, not the one you start praying to God or you want to lose out everything because you didn't size accordingly or accurately. So say you have $5,000, and it depends on how much you get. This thing gets complicated as the more the market gets as well. The more complicated the market gets. I've seen people talk about have something for crypto. Personally, I wouldn't recommend it. It's up to you. You might have they call it pick and shovel, really, which is the crypto stocks instead. You don't always have to have equities. You saw the 60-40 It depends on your age, of course. Depends on. So this thing is very complicated. But let's just say you are in your 30s, 40s, even 50s. We live longer nowadays. This is for your equities, while this is your bond. Why? Because this moves quite fast. This is quite slow. But now the cryptos enter the chat. You know, you could say 60, 30, 10 if you like, and this is for your crypto. It's up to you. But for me, I tend to always favor, I mean, I will factor crypto into conversation. So I'll probably say 50, 30, 10, 10. Well, this is your equities, this is your bond, this is your, if you have bond, mutual fund, fund, etc. Just have something that protects the downside. This is seen as less risky bets, you know. This one, this 10% is your crypto, etc. It's a gamble, by the way. We still don't know. Okay, we just believe, and um, and this is cash. You need to always have cash on the sidelines, and of course, cash for trading, if you like, for trading. And some people don't even hold positions, so they just trade all the time. So you want to have some cash. And now, when it comes to this one here, this is the key thing. When it comes to equities, you don't need more than 3 to 5. It depends on the portfolio, though. If you only have about 3 grand, guys, honestly, you don't even need more than 2 to 3. If you have 10 grand, then I'll probably say 3 to 5. Normally, the ideal, it varies. The ideal people tend to say 6 to 8 or 8 to 10, even 30. You know, you might say, yeah, but Warren Buffett's got about 50. Yeah, but he's got 100 billion. So you cannot compare yourself. So because if you the more you spread yourself, the less you would achieve, and the more money you make, it's harder to manage a bigger portfolio. Um, you all know about the Pareto principle, 80-20, which, if you've never heard of Pareto, is an Italian mathematician. I'm sure most of you have heard of him, Pareto. He said, and this thing applies in life as well. He said, the 80% of the wealth in the world is owned by 20% of the people, and that's the same thing. If you look at the group where we are as well, 80% of the conversation is done by 20% of the people. It's the same thing applies to your portfolio. 80% of the portfolio of the money of the profit you make in your portfolio is going to come from 20% of your stocks you know. So it's always going to be like that. So you might say, yeah, you want to pick 10, but if you like pick 10, not all of 10 is going to be performant. There's one of the portfolios I shared, where which was about 220%. I beat the market proudly. But if I told you that, but if you look at the portfolio in detail, I think three of them, there are 5 stocks in there, but three of them was about 200% each, 300%, 400%, while the other two is just about 40, 35% lukewarm performance over 5 years. So that's just the way it works. So don't try and be in everything. I know, I woke up this morning, the greed in me just wanted to be in everything, but you know what? I had to give myself a nudge and I say, relax, okay? Relax. The opportunities everywhere. And I'm not emotional to this guy. A stock is a stock. I don't care, whether it's this stock or that stock. It doesn't really bother me. So, just slow myself down. And I just bought about 3. Or I just made sure my exposure is not just more than 3. And likewise applies to the trading as well. Okay, so that's just something I thought I should mention. And okay, that should conclude the meeting for today. But let's see if we have our questions and we can before we wrap it up for the year. I'll give you 10 seconds. If you haven't got any questions, I will call it a day. Okay. No question. Thank you. Okay, guys. I hope
Good
you've
evening,
had.
PK.
Oh, hi.
Yeah, sorry, please. I would like you to help me check D40 again.
Oh, you're still in. Chai.
Yeah,
Do you know what? I forgot about it. Oh, okay. Yeah, so let me share my screen and then I'll share what I can see. It's quite funny because I could still see the line I drew on it. So that was the line I drew, and I expected it to come down. Yeah, so this Yeah, yeah. So nothing has changed from the way I see. I think it will. I think it will come down. Let me see. So like, nothing will go up forever. That's number one. Okay, just give me a second. So nothing will go forever. And pardon me. Sorry, my phone is ringing as well. Okay, so looking at this is German 40. So I'm just looking at this now here. So if we let me see on the long run, so I mean it's still at the peak, still at the highest, and people are still holding quite all right. And okay, sorry, I'm just trying to. Yeah, okay. So it's accumulating now. So what this thing is what I can see. So I still believe in what I wrote here or what's here. What this thing is riding on is riding on sentiment, okay? It will come down. Unfortunately, it's gonna be costing you a lot in charges, but it will come down. It's riding on sentiments. I think, sorry, let me look at it on a daily. A lot of times when the chart hasn't when it's not committed, it doesn't really help me. So, okay, so let me get rid of this here. So my target for this is still 16,000. This, if you notice, there's a struggle around here. So, and I don't know how long it's been there. It's been there for, well, look at that, 12th of December. It hasn't really moved at all. Can you see that here? It's just flat. It's just flat. You might say, yeah, but it's accumulating to go up, but there's nothing at the top. It's never been there. So I would expect this thing to come right back to at least 16 again. So I still believe what I said, and it will happen. The shameful thing is this thing don't come in a straight line. They don't happen straight away, but um, but that's how it will happen. Okay, so I would say if you can still hold a bit, still hold. Unfortunately, you have to hold. Be patient. That's it hasn't really gone beyond where it was right now. It was at 17,000, but it was rejected hard, and so it might go up there again, but it will come down. At least it will come to test the lows. I can't see anything else here. I haven't done moving averages or anything, but that's just basically what I can see, and that's it. So it would still come here. Yeah, this doesn't look great at all compared to this other one. So yeah, it will come down. Definitely will. Somebody's asking, how do you short stocks? Shorting
Thank
is
you.
just the same. That's fine. So shorting is the same as going long, really. It's just the opposite side. So instead of if you have a position, you just instead of you saying buy, you say sell. So um, I don't want to turn this to a session because it's not really a trading session. But um, okay, sorry. So let me just quickly talk about going short. So let's just say this is so for example, this is a short that went wrong. And I think the brother went in sometime somewhere around here. Okay, so because it's going up and it thinks it's gonna come down. So yeah, so this is short, and of course is once it goes above you, you are negative. Okay, and that's simply what it is. So on the other hand, you expect it to come down, so you might want to go short more. If you believe it's still going to come down, then you're going to short. And if you think it's going to go up, then of course you're going to go long. So going long is what you buy, which is literally you buy, go long. Going short is you sell. But the difference is that when you go short, you don't own the stock. When you go long, you own the stock. So it's not yours, it's borrowed. But if you do leverage, you don't own it at all. It's a derivative either way. The other thing is somebody said if you have, so yeah, I don't know if that makes sense. When do we long oil? We called oil already in the group, and we went from, do you remember 69 to 76, didn't we? So that's what we did. If you remember that, Hamid, because somebody just asked me now. But we went oil, we went long, and we came out around this point, didn't we? I even posted in the main group as well, from 69 somewhere there. Can't remember. Yeah, it was around. No, it wasn't that June. Okay, it was from here actually, 71, 72 to 76. Was it that November? No. Yeah, it
Yeah.
was here. No, yeah, I was right. It was 69 to 76, just 76 here. If you remember. Oh, wow, that was perfect though. I said 76, right? When the exit we quoted, and he literally creamed it off and it came right back. We should have just, yeah, escorted back down, but I don't care. But anyway, maybe it's not plain enough for me. So would I go long again now? Not really. Would I go short? Not really. I can't. It's got to be very well defined for me. Um, so what made me go long? So this is it. It came down, back, back again, and I realized they rejected it, and boom. So that's what I can see. So so that's what made us go long here. But when is it time to go long again? I haven't seen it. If I do, I will see. I would scream. I would call it out in the group. Right now, I need to see them beating this low first or rejecting it from this low before I can call it a long. But until then, I will wait and I'll hold my bullets or save my bullets. The other thing is, what do you advise? It's how to trim your portfolio if you have quite a lot, which is actually everyone's headache. I've been there before. There was a time I had over 100 many years ago, and some of them are. So somebody said, so for me personally, it depends on, we all. I don't know if we all Nigerians, but we're mostly Nigerians here. And what do we do? Money is not easy to come by like that. We don't just get money like that. So what do I do? What I would advise is that we patience, number one. Um, I'll wait for the sentiment seems favorable. When things start coming, then I'll start trimming. Once they, just start selling off. Just make a list of the, I don't know, five, six, seven, eight that you want to hold. And then when things start getting better, start selling in profit. And if you may not be in profit with some of them, unfortunately, the more you hold, some of them, the more you'll be bitten. Some of them you would encounter quite a lot of splits. So you would encounter quite a lot of some of them would go bankrupt. Some of them will also get so talking about reverse split bankruptcy. Some of them will get delisted, unfortunately. Some of them would have to raise offering. Some of them will probably just turn to nothing. So you either sell everything as much as you want if you have no more faith, or you wait for the bull and then start selling. Use the opportunity of a pump to sell. So those are the two things I would advise personally. And yeah, but trim them. Don't wait on this. Don't wait on these things at all. Be able to trim and just stick to the conviction and start building on your convictions on the down day. So that's what I would advise, please. It's up to you what you want to do, but of course, I think it's a recommendation for me. You don't want to hold too many. It's just hard to keep up with, even especially with trading as well. There was a time I was trading, I think I had about 11 positions or 18 actually, and it was a down day, horrible down day. And I was just cutting all of them, each and every one. And I remember, lost quite a few amounts of money. And eventually, I just said to myself, you know what, I'm gonna stick to my, three, five positions at the most, three maybe. But yeah, okay. So that's what you should do, please. Do I have favorite stock? No, I don't have any favorite stock at all. As far as I'm concerned, a stock is a stock. There was a time I used to announce my stocks when I sell them, when I buy them. I still do sometimes. Um, I announced when I sold my Apple, I put it out there, and someone like, "Oh, you sold Apple." It doesn't bother me. You could sell anything. Um, I bought AMD at $2. I wouldn't call that trade. It's just a luck, really. You might be lucky to some of these things. I had Nvidia at 67. I sold it at 460. Oh, no, never got to that point when I sold. Sorry, maybe 350 or something like that. I sold AMD from $20. I held it and I sold it at 80. Oh, why am I sorry from $2 to 80? I'm happy with where I am in my life, in my trading and journey, and you can't win them all. It doesn't bother me. So I don't have a favorite stock at all. None, none. To me, they're just all the same. Um, okay, I think I answered your question. Um, how do I monitor stocks? I have quite a lot on my watch list. Yes, I monitor quite a lot. Like I said, you got to treat it as a business. This is what pays my bills. So, I designed an Excel sheet. You've all seen it. I have quite a lot I monitor. And on a weekend, I work on, and this hopefully you can do this as well. You got to give that time to yourself if you really want to make money in this, in this business. And it's quite strange that, I made the most money I made in this year. I made it in the last 2 months alone. So what do I do? Weekend alone, I just look again, and sometimes I might even think I'm watching too much. I might just look at the ones I want to focus on, and again, I keep it to about 15, 20, and that's why sometimes anyone might of them might pop out, and if they do pop out, it is what it is. I do it. So the good news is, for example, overnight, China paid me, and I've been screaming to people, China, China, China. People don't care. Oh, that, and that's something. Forget the headlines. I really don't care what the headlines are saying. Oh, things are bad. Da, da, da. Okay, but the charts are telling me something else. Okay, and this guy, if you look at this, for example, the charts are saying something else. So why would I listen to you if the charts are saying something else and you are telling me, you know? So if you look at this, this is Hong Kong, which went from here all the way here, or Singapore 25, which we've been looking at as well. We unfortunately I left some money on the table with this one here because if you look at Singapore 25, look at that. We were here and we're just able to catch it. It's not we're not bottom fishers, but look, I don't know where we caught it, but this is 100%, with a well, I mean, if you do at a 100 at a 10x or 20x leverage, 20% or 15%, or I think I came in right here, times 20. That's 200% in literally how many days? 15, 2 weeks, you know. So I would happily pay tax over that. It doesn't bother me. So people keep saying China, China. So while some people are avoiding China, I look at what this is telling me. Is it telling me the same thing I'm seeing? Last 2 years ago, I I went short on Apple because I expected the market to dump. Oh, inflation is hitting all-time high, da 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 da. But guess what? The chart is saying something else. I'm not going to trade against what the institutions are doing. Who am I? I haven't got their money. So if the institutions are piling in positions, who are you to? I read something on someone said, "Oh, market doesn't make sense. How can Mara's done 500%? This was done 700%." I'm like, it's not supposed to make sense to you. How is it supposed to make sense? So when it does what you want to do, that's when it makes sense. So it makes sense when you are winning. But when other people are losing money or making money and you losing money, it doesn't make sense. No, it makes money. The market will do what the market will do. You're supposed to change to fit the market. It's not supposed to change to fit what your position is. So you don't trade or you know trade what you expect of the market. You trade what the market says. Full stop, and that's it. Um, yeah. So looking forward to 2024, guys. And I hope there's no more questions, so we can call it a day. Okay, so in 2024, I hope you all have a good year. I don't do resolutions. I try to have goals, but no more resolutions for me. My resolution is daily. I'm old enough to just to be grateful for for breathing. I open my eyes and I'm just grateful for another day. So I'm not going to hold any resolution because tomorrow is just a bonus. Today's a blessing. I'm going to take care of it. So guys, if you don't struggle in silence. We have a big community. Speak out, even if you cannot afford to join the private one. As you can see, I give as much out in the people in the community as much as possible. And like I always said, I will trade alone. It doesn't bother me. It's not about people joining. Yes, people joining. I'm happy to help, but considering where we all came from, our background, you know, uh, it will be helpful if we all build and let's build, let's be different, okay? And let's raise each other's hands, and that's all that matters. On that note, guys, happy new year and have a blessed 2024. Good night, take care, bye bye.
Okay, thank you, Benga. Bye.
Thank you.
I
Bye everybody.